All right, so you want to get to the heart of the matter, right? You want to really understand something important, but without drowning in a sea of information.
That's exactly what we aim for. You've provided us with a very interesting set of documents, BlackRock's annual reports from a pretty significant period of time.
Yeah, and our mission here is to really distill those crucial insights. You know the things that matter, so you can grasp that big picture without all the noise.
Exactly. Today's deep dive, we're going to be looking at the financials of a really major player in the investment world, BlackRock.
Yeah.
You've given us their annual reports, primarily from 2008 to 2013, which is a great core sample,
Absolutely.
and then sprinkled in some data points extending all the way up to 2022, just to provide some really valuable context.
Awesome. So the goal here is to really map BlackRock's financial journey throughout those years, not just looking at the numbers themselves, but what they tell us about their business, how they've navigated kind of the ups and downs of the financial landscape, and even, some of the regulations that they have to play by. So let's jump right into 2008, a year that definitely had its own, shall we say, a unique flavor in the world of finance.
Right. It did. Absolutely. So if we turn to BlackRock's 2008 annual report, they report a total revenue figure of $5.064 billion
Wow.
and operating income of $1.593 billion. Now, this is where it gets a little interesting because they also filed their 2008 proxy statement,
Okay.
and that provides some additional information, kind of supplemental to the annual report. And in there, they present what are called as adjusted figures.
Mm-hmm.
And essentially what this means is that they're making certain adjustments to the standard accounting numbers, the GAAP numbers,
Right.
to really try to highlight how they see the underlying performance of the business.
Okay, so what did those as-adjusted numbers tell us about their 2008 performance?
Interestingly, the adjusted operating income actually showed an increase up to $1.662 million. Now, they attributed this primarily to revenue growth. Part of that included a major acquisition they did of a company called Quayos. And then also they had lower foreign currency remeasurement costs that year, which also helped. But this increase was offset somewhat by higher salary expenses and then the way they accounted for the value of intangible assets, which is a process called amortization. So essentially what they were trying to do, even in a year of pretty significant economic upheaval, was really highlight this adjusted slightly more positive view of their operations.
Got it. So it's kind of like saying, all right, here's the main headline, but under the hood, here's really what's going on.
Right, exactly.
So moving into 2009, as the global financial crisis continued to unfold, what did BlackRock's numbers look like then?
So amidst those ongoing economic headwinds, their total revenue in 2009 actually dipped a little bit to $4.700 billion.
Okay.
And operating income also decreased to $1.278 billion. But if we dig a little deeper into that 2009 report, we actually see some very interesting details. They break out something called other revenue, which includes fees that they earned from providing what are called transition management services, essentially helping clients move large amounts of assets.
Okay.
And they also generated revenue through commissions from things like unit trusts and Class A mutual funds.
So this gives us a little window into some of the different ways they were making money beyond their core investment management fees, which, probably helped them to cushion the blow from, the overall market downturn that was happening.
So even when the primary engine might have been sputtering a bit, they had these other revenue streams to help keep things going.
Yeah, exactly.
So now we move into what looks like a period of recovery and some pretty significant growth from 2010 to 2012.
Right.
What were some of the big stories in 2010?
So 2010 definitely marks a turning point for BlackRock. Their total revenue surges to $8.12 billion.
Huge.
And net income, which is essentially their profit after all expenses, reaches $2.063 billion. But we again see those non-GAAP adjustments in 2010.
They specifically point to costs associated with their acquisition of Barclays Global Investors, or BGI, which was a massive acquisition for them. They also had some expenses related to funding for PNC's long-term incentive plan, and then some compensation contributions related to Merrill Lynch. So these adjustments actually bumped their net income up even further to $2.139 billion.
Wow. Yeah, the BGI acquisition, that was a real game changer for them in terms of size and, reach in the market.
Oh, absolutely. It was more than just getting bigger. It was really about strategic positioning.
Yeah.
Because they really saw an opportunity to capitalize on the growing demand for fixed income investments following the financial crisis. And it gave them a major foothold in that very crucial market segment. And then their 2010 report also begins to highlight just the increasing complexity of their investment portfolio. They mentioned over $1 billion, 1,051 million to be exact, in various investments that were kind of accounted for in different ways. Some of those gains or losses flow through their regular income statement, and others actually go into what's called accumulated other comprehensive income.
Accumulated other comprehensive income.
Yeah, it's a bit of a mouthful.
Yeah. What exactly is that?
So think of it as a temporary holding place for certain types of gains or losses that haven't really been fully realized yet
Okay.
in the company's main income statement. So it might include things like changes in the value of a foreign currency holdings or certain investments that are, regularly marked to market but haven't yet been sold. So it's really just a way to try to capture potential future changes in value that haven't yet been locked in.
Okay. Got it. So it gives us maybe a more complete, but
Okay.
perhaps less immediate view of their overall financial position.
Ex-
Now, you also mentioned something about carried interest. Can you elaborate on that a little bit?
Yeah, carried interest is a really important concept when we're talking about alternative investments, things like private equity. So you could imagine BlackRock manages a fund for its clients that invest in these types of assets. And if the fund performs well, it generates a lot of profit. Well, BlackRock typically gets to share in those profits as what's called a performance fee, and that is carried interest.
Right.
But there's often a clawback provision, meaning that if those initial, gains don't continue, if later investments in the fund underperform, BlackRock might have to give back some of that carried interest that they had previously earned.
Oh, wow. Okay.
So in 2010, their annual report notes $23 million in what they call deferred carried interest. So it hasn't yet met all the criteria to be recognized as revenue.
Okay.
So it really highlights that even these potential profits, they're not always guaranteed.
It definitely adds another layer of complexity to how these big investment firms operate.
It does.
So let's fast forward a couple of years now to 2012. What was the financial landscape looking like for BlackRock then?
So by 2012, the growth story continues for BlackRock.
Okay.
Total revenue climbs to $9.337 billion,
Wow.
and net income reaches $2.458 billion. We also start to see them returning some of that increasing profitability back to their shareholders.
Yeah.
They start increasing their dividend payments, and they also start actively buying back their own shares,
Okay.
which essentially has the effect of increasing earnings per share for the remaining shareholders.
Interesting. And there was also some mention in the reports around this time about PNC Financial Services.
Yes, and that really brings up an interesting point about corporate governance. So because of a stockholder agreement, PNC, which at the end of 2012 owned about 20.8% of BlackRock's voting common stock, had considerable influence within the company.
Oh.
So this essentially meant that a very substantial block of voting power rested with BlackRock's board of directors, regardless of the preferences of some of the other stockholders.
Wow.
So it really just gives you a glimpse into how these ownership structures can really impact decision-making at the top of a company.
That is a really important point to understand about the dynamics within a publicly traded company.
Absolutely.
So now let's move on to 2013, which looks like another year of, substantial progress.
Oh, absolutely was.
Yeah.
In 2013, BlackRock really builds on its momentum. Total revenue jumps to $10.180 billion, and net income rises to $2.932 billion. But what's really striking is if you look at their 5-year compound annual growth rate, or what they call CGR from 2008 to 2013,
Right.
they report a 15% average annual growth rate for total revenue
Wow.
and an incredible 30% CGR for net income.
So they were just crushing it.
Yeah. And their operating margin, which is the percentage of revenue that's left over after operating expenses, was a very healthy 37.9%.
Wow.
So these figures really underscore just how well they were performing in the market.
Those are some seriously impressive numbers. The report also mentioned some changes within their leadership around that time.
It did, yes. And these leadership changes, I think, provide really valuable insight into the company's, ongoing development. So in 2013, they welcomed 2 new members to the board of directors, Pamela Daly and Cheryl D. Mills,
Okay.
bringing very diverse backgrounds in business and public policy. Sadly, they also noted the passing of a long-serving director, Dennis Dammerman. And they announced that James Rohr and Thomas Montag would be completing their terms on the board at the 2014 annual meeting.
Okay.
So it just shows you the natural evolution, of a company's governance and strategic direction over time. as you know, new voices and experiences come in.
Absolutely. And looking just a little bit ahead, they also continued to signal, confidence in their financial outlook with the dividend increase.
They did. In January of 2014, they announced another increase to their quarterly dividend, raising it to $1.93 per share. And this was a clear signal of their commitment to returning value to shareholders. They weren't just focused on growth for growth's sake. They were thinking about their investors.
Absolutely.
And then one other thing the 2013 report really highlights is just BlackRock's extensive global reach, noting their operations in over 30 countries across every major region of the world. So really solidifying their position as a true global player.
Yeah, by 2013, they had not only weathered that major financial storm,
Right.
but they emerged significantly stronger and with this really impressive global footprint.
Absolutely.
So let's zoom out a little bit now and look at the period leading up to 2022. What can we learn about the evolution of their business and maybe some of the broader market forces that were at play?
Well, when we look at some of the data and the images that you've provided from the later years, we see some really interesting trends emerge.
Okay.
Their assets under management, or AUM, which represents the total value of the assets that they manage for their clients, continue to grow substantially.
Right.
And then we also see how their revenue generation shifted across different types of clients. So you have these large institutional investors, like pension funds.
Right.
You have retail investors, high net worth individuals. And then you have their hugely successful iShares exchange-traded fund platform. And there's a very clear upward trajectory, both in the popularity and the growth of iShares, as well as their alternative investments, which are things like private equity, real estate hedge funds.
Yeah.
You're generally like liquid than traditional stocks and bonds.
Right.
And then we also get a glimpse into the mix of their AUM between equities and fixed income and how that can fluctuate based on overall market conditions and what clients are looking for.
Now, for a company of this size and global reach, the regulatory environment must be a constant factor to consider.
Oh, it absolutely is. I mean, if you read through their reports year after year, you constantly see them talking about navigating this really complex web of regulations.
Yeah.
This includes things like adhering to the Bank Holding Company Act in the United States, which is largely due to PNC's historical ownership stake.
Okay.
You have the Markets in Financial Instruments Directive, or MiFID, in Europe,
Right.
and the Financial Instruments and Exchange Law in Japan. So these are all regulations that really set the rules of the game for how financial firms operate in those regions. And then later on in their reports, they even start to touch upon the potential impact of the Volcker Rule, which was designed to restrict banks from engaging in certain types of speculative trading and investments. And even though BlackRock itself isn't a traditional bank, their relationship with PNC meant that they really had to pay close attention to how this rule might indirectly impact their business.
So it's like a constant balancing act between pursuing growth opportunities, but also adhering to this complex set of rules.
Oh, absolutely.
Now, risk management must be, paramount for a firm that's handling such a massive amount of assets.
It's absolutely critical. And, they consistently emphasize their strong focus on risk management practices.
Okay.
This includes having very robust internal controls over their financial reporting to ensure accuracy and compliance. And then they also talk about their use of derivative financial instruments, which are things like futures and options.
Right.
And they use those primarily for hedging purposes, so meaning to reduce their existing risks, not to make speculative bets on market movements.
Right. Okay.
And then you also have to consider their client base is incredibly diverse. I mean, it ranges from huge tax-exempt organizations like public pension funds, university endowments,
Great.
to official institutions like central banks and sovereign wealth funds.
Wow.
As well as taxable corporations, and then individual retail investors.
So the whole spectrum.
Yeah, so managing the diverse needs and the risk profiles of all these different clients is no small feat.
Absolutely. Now, beyond just managing investments, BlackRock also has some other really significant parts of their business.
Right, they do, yes.
Yeah.
So BlackRock Solutions and their Aladdin technology platform. Those are really key differentiators for them.
Okay.
So BlackRock Solutions provides a whole range of risk management and advisory services to other financial institutions and investors.
Okay.
And then Aladdin is this incredibly sophisticated technology platform that they use internally for portfolio management risk analysis trading. But they also license it out to a lot of other large institutional investors.
Wow.
It's basically a massive integrated system that's designed to provide this really comprehensive view of investment portfolios
Yeah.
and all the potential risks that are out there.
Wow.
And then as we get into the later years, particularly around 2022, we see a major strategic push to migrate Aladdin to the cloud. So that really highlights just the growing importance of technology in their operations,
Yeah.
allowing them to achieve greater scalability, efficiency, and really handle just these vast amounts of data.
Right. So finally, looking at their stated long-term strategy, particularly as it was outlined in the 2020 report, what were some of their main priorities for the future?
So their long-term vision really rests on several pillars. First and foremost, they aim to deliver strong investment performance for their clients, which is what they call generating alpha. So, trying to beat the market.
Okay.
But they also wanted to accelerate growth in areas that they saw as having significant potential. So this includes their iShares ETF business,
Right.
which has really become a dominant force in the investment landscape.
Absolutely.
They also want to expand further into illiquid alternative investments, which offer potentially higher returns but come with different risk profiles. And then leveraging technology even more, particularly the Aladdin platform, to provide these really comprehensive solutions for clients across all of their investment needs. And then another major focus is on delivering what they call whole portfolio solutions. So essentially acting as a strategic partner for their clients,
Yeah.
helping them construct and manage their entire investment strategies.
Oh, wow.
And then a really important and growing priority is their commitment to being a global leader in sustainable investing,
Yeah.
which reflects the growing demand for investments that consider these environmental, social, and governance factors.
Right.
And then I think it's important to note that they still believe in both active investment strategies,
Like.
where they're trying to pick winning investments,
Right.
and passive or index strategies, which are essentially designed to track the performance of a specific market index.
Got it. So as we bring this deep dive to a close, what would you say are the most, significant takeaways from our exploration of these BlackRock reports?
Well, I think we've witnessed a remarkable period of growth and transformation for this company. Between 2008 and 2013, they showed incredible resilience, expanding both their revenue and their profitability. And they successfully navigated the complexities of a major global financial crisis. They broadened their reach globally. And their business model really became increasingly diverse, encompassing a wide range of investment strategies, this really diverse client base, and then constantly having to adapt to these evolving regulatory landscapes.
So what really strikes you as the key aha moment in this journey?
I think for me, it's really the strategic evolution that takes place. They go from a period of recovery and stabilization following the 2008 crisis to this phase of substantial and very strategic growth and diversification. And this era really laid the groundwork for a lot of their current ambitions, things like their cutting-edge technology with Aladdin, their big move into alternative investments, and their growing role in global and sustainable investing. You can really see the seeds of their current strategic priorities being planted and nurtured during these early years.
Yeah, looking back at this period of, significant change, it really makes you think. How are those major trends that we observed in these reports? The increasing, interconnectedness of global finance, the just relentless march of technological integration, and then the need to constantly adapt to these complex and shifting regulations. How are those forces continuing to shape the investment management industry today?
Right.
And, considering this journey through their history, what might the next decade hold for a powerhouse like BlackRock as those trends continue to unfold?
Absolutely.
Definitely some thought-provoking questions to consider as, maybe you dive into some of those reports on your own.
Yeah.
Thanks so much for joining me on this deep dive. It's been a pleasure.
Likewise. Thanks for having me.